Hey, what's up, guys? John, did you catch that game last night?
Too soon, Brady. Especially while there's a Canadian amongst the four of us here.
Yeah, we got Hurley today, the star of the Swan YouTube channel. Steven is out. We've got Hurley standing in. Hurley's up there in the great north.
Yeah, I was looking for my tank top, but yeah, it's 0 degrees here. We got like 4 feet of snow, so it didn't seem suitable. So I'm like Steven, but dark hair and no tan. So
I was disappointed that there weren't any fist fights right out of the gate.
Yeah.
Anyway, does this mean we're not, going to get Canada as a state, or does this mean we have a higher chance now of getting Canada as a state, since you're gonna, sort of spark Trump's competitive hackles here?
Could be argued either way. I will say that had Canada lost that game last night, they might have just voluntarily folded as a country. They're on their last legs. America's been winning so much. We had to pause the winning just for a little bit.
Well, maybe if Canada becomes the 51st state, then you guys can actually win a hockey game for once. So.
I'm down with that. I'm in it for the tariff-free maple syrup.
Right. It's really an immigration strategy to acquire the best talent from around the world. Maybe that's software engineers. Maybe that's hockey players.
That's a good point. Welcome back to Swan Signal Live, everybody. Thanks for joining us. Happy Friday. As I said, Steven is out today on business. So we've got Hurley here, who, if you're watching on YouTube, probably recognize this guy's face. He puts out some awesome videos, awesome content every week on Bitcoin. So glad to have you here, man.
Happy to be here, man. Thanks for,
And I got to give a quick shout out to, oh, sorry, man, I'm talking over you. Go for it.
It's all good.
Yeah, and shout out to Mara too for helping to support the show, for helping to secure the Bitcoin network. We appreciate your support. All right, guys, we got a lot to talk about today. We're going to dive right in like we usually do to look at some price action, market action first. So let's take a look at this tweet from Turdemeester, one of my favorite market analysts in Bitcoin and just an awesome person in general. Posting a chart here of Bitcoin in gold terms. And Bitcoin is in a 4-year holding pattern versus gold. And Tur says once it breaks out, the rally will be epic. John, would love to hear your take on this chart.
Yeah, I think a couple of things here. One is that gold, I think in everyone's opinion, this is probably not controversial, but most analogous asset to Bitcoin is gold. It helps in explaining Bitcoin to normies. And in addition to that, their prices are often going to move somewhat similarly. Obviously, Bitcoin has way more volatility, way better annual performance over the past bunch of years. But I think it's interesting that we see them move in the same general direction over time. And this chart and some others have shown that typically, not always, but typically gold ends up leading Bitcoin in price appreciation. And that's been the historical pattern. I think one exception to that, by the way, was about this time last year when the ETFs got launched. So there can be idiosyncratic things that cause Bitcoin to outperform, but historically, much of the time, gold price has risen ahead of Bitcoin price rising. Gold is at an all-time high now. It has done very well. I think technically gold is outperforming Bitcoin year to date. So Peter Schiff gets to take his mini victory lap. But yeah, the takeaway there would be if that trend continues, it's signaling that Bitcoin might be coiling up for some appreciation here.
I think an important
breakout versus gold.
Oh, sorry. Here we go. Brandon. I'll raise my hand. I think it's important to keep the gold pair versus Bitcoin in mind, because it's easy for us to get really excited against the dollar or the Canadian moose shekel or the Australian kangaroo peso. But those things are getting printed out of control. And so it kind of gives us a little false sense of growth. So I think gold's a better real pair for us to look at. And it's the same thing when you look at common knowledge in the US, in quotations, which is that put your money in real estate and you're gaining purchasing power. You're just pouring money down the drain if you're renting. But if you look at real estate prices over money growth, you're really just you're taking on fiat debt. So you get to buy an asset. You're essentially shorting the dollar, and that's where your gains come from. But the home price just more or less keeps up with inflation. Similar with the stock market And so, yeah, it's good to keep those in mind. And what I think here, zooming way out for a second, is I still think gold is going to make another attempt as the Eastern countries, let's say, we're starting to fracture a little more multipolar world. And the East has been selling US sovereign debt and buying gold for a very long time. And I still believe that we're going to see gold attempt another run at global reserve currency. I think it'll fail. I think Bitcoin will ultimately take that place, but I don't think the confidence is quite there yet around the world.
Yeah. Yeah. I mean, I completely agree. I think, gold always tends to run first and then Bitcoin tends to follow. And we've seen that plenty of times before. But you say it's like, gold has outperformed Bitcoin year to date, but you got to zoom out and look over the past 15 years and like, it's not even close, not even close. So Peter Schiff has got to take a loss on that. Yeah, it's and I agreed also. I tend to I keep Bitcoin priced in gold as like my main driver of the price, because it's like, pricing Bitcoin in infinitely inflatable fiat can be it's just a much more like grounded barometer of really where we are. So, and right now we're just like right around all-time high in gold, right? So we're still bouncing on the door and we're ready for a breakout.
It's like pricing TV and radio terms. It's the better technology. Let's measure it against the previous best in class technology. Yeah, absolutely agree. It looks like we might get an audit of Fort Knox, guys. It's Trump has talked about it. Elon talked about it this week as well. Trump said he's going to go himself. That's what he said. I don't know if that'll happen, but the guy's got a knack for putting together great meme-worthy photos. So him walking into the front doors of Fort Knox would be pretty incredible to see.
Yeah, you had talked about live streaming it on, I'm assuming on X, like a walkthrough of the gold. But I did a video on that too, where it's like it all comes down to who's going to trust the audit, anyways. You know what I mean? Wouldn't the government, wouldn't the U.S. government be incentivized to say that all the gold is there? Like, it would be really bad for them to be like, oh, none of the gold's here. And like, there's this like pipe dream that they're going to be like, oh, we don't have the gold, so we're just going to go ape into Bitcoin. But it's very unlikely. I would say it's like, if anything, this is just an advertisement for why Bitcoin, because it's instantly auditable by anyone. You don't need to trust some government agency to go in and do an expensive and timely and time-consuming audit. And we don't need to trust governments to tell us that they have all the gold when we need to see it on a live stream or whatever, right?
Yeah, I mean, wherever you land on the political spectrum, I think we can all agree that it's absolutely absurd that we don't have this thing audited like at least once a year. This is the public's gold. We should, we have the right, in my opinion, to see if it's there or not.
I'm surprised they haven't just said, "Oh, we've audited it and it's there."
Yeah. Well, I think that's what they do say, but who knows? I don't know. It'll be interesting to see. All right, so we've got Bitcoin on the verge of a breakout against gold, which is quite bullish. We've also got, I think we showed this chart last week, but I think is also a very bullish chart. Speaking of current price action, this is the yellow line is the MVRV, which is basically the market value versus the realized value. The realized value is a measure of the price at which the coins were bought. So basically people's cost basis over time. And you can see the big spikes in the bull runs, and we're still hanging out down here, indicating that we're still very much in the early to mid stages of a bull run. So good charts right here for the bullishness. I think the breakout is imminent, in my opinion. I think we'll see something in the next few months for sure, and probably run up pretty crazy. It'll get to the frothiness maybe toward the end of the year.
And is it just going to be a stair step? And we're just like, because everyone's expecting that like euphoric blow off top, which I mean, obviously could happen. But I know Steven had given his thoughts on it. I'm curious what you guys think a little bit more of it, because I've done videos on this too, where, I mean, you can't deny the fact that, everything has changed. It reminds me of Saylor's talk at, I think it was Prague last year, where he's like, this is the beginning of the Bitcoin gold rush with like the ETFs, the institutionalization, even now, like, nation state sovereign wealth funds buying it. It's like, and then even just not, running up to 100K and not, I was so expected a crash back down to 80 or something, or high 70s, as would have been characteristic for other bull markets. And that didn't happen. It's just steady accumulation and kind of consolidation. It's going on, almost 4 months now. reminds me of what happened when it was up at 70, 80 for 6 months last year. So maybe we're just stair stepping up. Who knows?
Yeah, I mean, I've been saying this for a while. I think that we're probably entering into a new era in terms of the chart action. Much less of drawdowns, in the midst of a bull market. And I think maybe this pattern of just like a 20% consolidation band for a long time, and then spikes up, and then another consolidation band, a stair step, could certainly be what we're looking at. The market is maturing. There's a lot more money in this, a lot bigger players now, a lot more sophisticated players. So I think that those big dips will be bought up much more quickly than they have in the past.
Yeah, two things here quick. For Fort Knox, I think I'd like to send in our auditor, Pierre Richard. That would make me feel comfortable if he audits it in the same way that he was trying to get to the bottom of the Ethereum ledger. So I think he's our champion.
Yep.
When we bring up MBRV, I think that the big takeaway there is that even against hodler orthodox, people do sell when they're in profit. That's been shown on the on-chain stuff. I think we'll talk about, is it price suppressed, or is this just run-of-the-mill taking profits type thing? But it shows very consistently above 3x profits, people do sell coins. Then you get to 100K, it's a nice psychological number. Humans can't help themselves. If you're a long-term hodler, feels like a pretty big milestone. And it's not surprising to me that we hang out here for a while and we churn through all that new supply coming onto the market. And hopefully individual plebs are stacking that coin and it's not just getting hoovered up by the Saylors of the world. Because we do want as much distribution as possible here. That's good for the network long term, and we want individuals to benefit from the price run as well.
Unfortunately, I feel like I was a little bit bummed about this recently too, because it's like, I think about just anecdotally, my circle, everyone's like waiting for a dip. Like my sister was buying some and she's like, I'm waiting for it to go into the 80s. I'm like, it's like, I think it's like people, there's obviously sellers, like people are taking profit because they have like, ton of coins and it's money. Bitcoin is money. Like I think people seem to have a problem with long-term hodlers selling, but it's just, money is a means to an end. You're not going to hold it until you're dead, right? Like say, not everyone can be like Saylor, or but yeah, it's people are selling, and unfortunately, it seems like it's being hoovered up by the big institutions and sovereign wealth funds, and it seems like at least now retail is kind of on the sidelines.
I'll just chime in real quick. Also one comment on Fort Knox stuff. I have a really hard time seeing either, number one, that Trump and Elon don't know what is like behind the Fort Knox, or at least have a good idea. I don't think they want to go into that situation not knowing what they're going to find in an audit, because God forbid you do find that less gold, no gold, whatever, you're like handing yourself a crisis that you now have to deal with. So I just really, even if they like point the finger to someone else, you're in power now, like you have to deal with it. So I have a really hard time seeing them going into that and letting it come to the point of discovering that there's no gold or there's less gold. I'd be shocked if it comes to that. And then on the other stuff, yeah, no, agree with you guys. I think the fact that anytime the price has gotten down to like, what has it been? 93's kind of been a general resistance level this year. It hasn't really dipped below that in a meaningful way. Or when I say this year, I mean, really since like the election, when that first run, the first time we crossed 100K, we've dipped down to like 93K, and it just seems like there's a good amount of buyers. So yeah, it seems like there's a lot of support here.
It looks like there's about $400 billion worth of gold in Fort Knox if we believe the total amount. Is that what you guys are seeing? And that also assumes repricing to current market price.
Yeah, I was confused about that. Maybe one of you guys can answer that. Yeah. Why do they not want to reprice it to today's value? They're like, no, they're valuing it. Don't they value it at like 45 an ounce or whatever it was when Fort Knox was built? Isn't that how it works? I don't really understand why they would do that.
Yeah, like on paper, this is my understanding of it. I haven't really did a deep dive on this because I just don't think it matters too much, to be honest with you. when I say don't think it matters, I'm referring to them, the fact that they have it marked on paper at a much lower historical price. If they just say, hey, we're going to mark it to market, okay, it makes the US government's books look like slightly better. You know, it's not like the debt goes away or something. Like, you still have tens of trillions of dollars in debt. The one scenario that I do think is interesting for gold is something Luke Groman has pointed out, that if they somehow mark it up well above the market price, and just like they try to basically pump the price of gold, there's like varying ways that they could do this. They don't have just unilateral control to say this is the price of gold now, but they could like influence gold to be much higher than the current market price. That would be interesting to me. If they just kind of say, hey, on our books, we have it at 40 an ounce or whatever it is. Now we're going to mark it up to 3,000, the market price. That's like an accounting thing that I don't think has too big of an impact.
That's correct. That just tells you how high the U.S. debt is, though. If they repriced it to like, what would that be, an increase of like over 90% in value of their gold, and it would still not put a dent in the debt? It's just like, it just tells you how bad the debt is.
Yeah, if we call it 500 billion in gold against 36 trillion in debt,
yeah,
not going to do much.
Not a drop in the bucket. Yeah, for sure.
We'll talk a little bit about the Bitbonds idea later in the show, but that is an idea that would hopefully put much bigger dent in the deficit and the debt than than selling off all the gold would, the value of our gold. There's a lot of talk about, or at least some anyway, this is about price suppression, market manipulation, etc. Samson mentioned it on Twitter. It's been mentioned elsewhere, including the chat. I've seen several comments in here about concerns about price suppression and market manipulation. Let's talk about this a little bit, guys. I mean, my quick take is we hear this every cycle, every bull market. We hear this, when we go through this chop solidation kind of stuff, price action. You hear, oh, this is being suppressed. And all I hear in my head is that Monty Python Holy Grail, scene where the pleb is like, they're digging in the ground and the king walks up and starts talking to him. He's like, no, help, I'm being oppressed. That's all I hear every time. Help, I'm being suppressed. It happens every time. There are very real causes of, consolidation periods like this. And we showed a chart last week too from Tur that showed that there's a lot of action and a lot of buying from new whales, and not much new buying and selling happening from older Bitcoin stashes, which makes sense. If I had thousands of Bitcoin, I would start selling some off and live my life and enjoy my life. And I might have a big round number in my head, and that big round number might be $100,000, which is quite a lot to hodl from $10 or $100 way back in the day. So this happens, and it's normal. I don't think there's any ill intent happening behind the scenes.
Yeah, I'd love to hear your take, John, too, just because it's like, just my quick take is similar to yours, Brady, but it's also just that, like, no one's saying that there's not some manipulation. Clearly there is paper Bitcoin and there's derivatives and stuff like that. So there is some manipulation, but all markets have that, right? And also it's like, I think about the gold bugs yelling at clouds about the price being suppressed for over 50 years or whatever. And, and I'm sure that's true to some extent, but the main thing is that Bitcoin, you can't suppress the price with paper derivatives in Bitcoin as much. It's not as effective against Bitcoin because you can take self-custody instantly, really easily, right? And then on top of that, it's like you can't really control it. So it's like you can be like, oh, price suppression. It's like, okay, I don't see a lot of people also providing evidence that there's price suppression. Like it's more like a feeling. It feels like the price should be higher. Okay, but and then also it's just like, it seems like there's this idea that people have, that Bitcoiners have, where it's like long-term hodlers selling, like it's like doesn't compute with them. Like maybe it's because they can't imagine having 10,000 Bitcoin or 50,000 Bitcoin and it being 100K, and then, like you said, that being a number in someone's head and being like, now I can pay off my mortgage. Now I can, whatever, pay for a nice vacation for my kids. So you're going to get selling as the price goes up, and this is all a part of how the Bitcoin is spread out throughout people, right? So that we don't have all these massive whales holding forever, right? It spreads out to hopefully to regular people. But yeah, that's my take.
Well,
yeah,
I'll go ahead.
Go ahead, Quintum. No, you go.
I was just going to add a tinfoil hat theory I've seen around on the interwebs where it's like Trump is trying to suppress the price so all his cronies can get some action before he lets the price pump again. And again, tinfoil hat all day. Good luck with that endeavor. Now, on the flip side, we should be very, very vigilant at watching what the administration does, because yes, Trump brought in a bunch of billionaires who are theoretically good at business and they should be able to run our country better, let's say. That'd be the bull case. But on the other side, those guys like making money and they've got their hand in all this kind of stuff. And so I would expect them to enrich themselves along the way. So I think that's where that theory is stemming from.
Yeah. And I'll just add, I think the argument, if you think something's being manipulated, well, just to expand on Hurley's point, it's like the people who do cry price suppression, whether it's gold or whether it's Bitcoin, they're usually light on the details. And when you've asked them, like, what exactly is happening in order for the price to be suppressed, like, you usually don't get a great answer. But even so, I would say looking at gold and Bitcoin, the arguments for that gold is suppressed or at least messed with in the short term, there is some evidence of that. Like, there have been big fines levied to like JP Morgan precious metals traders because they've like spoofed and like did fake trading and like all this kind of stuff. So there's like some real stuff that has happened in the gold markets, but I still think of that as like short-term suppression. But if there were going to be a market where the paper version of the asset was going to affect it more so than like underlying spot trading, I think it would be gold. Bitcoin, I think, is less exposed to that kind of stuff. And I just think all the reasons that you guys mentioned, people taking profits at 100K, it was only like 4 or 5 months ago that Bitcoin was in the 60K range. That those are much better explanations for why Bitcoin is chopping around 100K than like someone's doing this mysterious suppression. And just final point, I think we have to remember Bitcoin is, at least in the short term, there are big entities trading Bitcoin based on what happens in the broader markets. And like today is a pretty good example of that. Bitcoin ran up to, it was like 99 or something. It was like flirting with 100K again. Then you get this Bybit hack. We can cover that because I think that affected the price. But just look at the S&P 500 is down 1.5%. The NASDAQ is down 2%. There's not really an environment where you're going to see US stocks be down like a significant percentage and Bitcoin's just like rallying. Like these things are going to trade with some correlation, and that is a much better explanation than the mysterious suppression.
Yeah, and they can only suppress it for so long anyways, right? It's like a beach ball underwater. I love that analogy, right? Like it's eventually it's going to catch up, right? So it's like I don't understand what would be the obviously, the short-term suppression obviously would be the only, just to manipulate the market and maybe keep it down so you can buy more. Like, what would be the end goal of wanting to suppress it, right? Anyway.
Yeah, I mean, look, there are people who are going to want to sell. They may have a reason to. They may find, some sympathetic reasoning as well with other companies or big corporations, or who knows. And maybe they'll sell in tandem or something. I wouldn't call that manipulation. I wouldn't call that suppression. That's a market, and that's the way it is. It's not gonna work forever, and we know that from history and the fundamentals. Bitcoin is just too useful and is reached escape velocity at this point. So just be patient. This is also going around the M1 money supply for China, just skyrocketing. This is kind of a PSA. This is a redefinition of the M1 money supply in China, similar to how the US might redefine the consumer price index over and over and over again over the decades to make it seem like, consumer inflation is not as high as it actually is. So these definitions change. John, do you have any more color on this one?
Yeah, I think you hit it pretty well. This is not like, oh my gosh, sound the alarms. China's doing some giant stimulus and helicopter money, and a bunch of Chinese people now have newly printed money to spend. Like, that's not what's happening here. More of a definitional change, but I don't think it's nothing, because typically when they're changing definitions is because like it's in their interest to change the definitions.
Exactly.
Like the long-term trend here is that this is another fiat currency. On the long term, it's on the path of debasing or inflating. I use those words interchangeably. Now there's like nuances to get into with China. Some people think that they're actually in a shorter term deflationary period. If natural forces were allowed to take over, people are either defaulting on their debts or they're paying back their debts, and there's not enough new people going back into debt. That would be kind of a deflationary spiral. But as we've kind of seen in every single economy, the powers that be don't really allow that to continue. Because if you do, that presents a whole host of problems. So even if they are in a short-term deflationary trend, in my opinion, it's just a matter of time before they say, all right, here's the stimulus. We're going to fix this deflationary trend. That's not what's happening in this chart yet. That would be a future event.
And John, just so I'm clear, then would the incentives follow that if China is in a deflationary situation, they want to get out of that by changing this definition, they can start to show, at least in a chart, that it's not going to be deflationary because look, this is growing? Or do you think that those are separate incentives or separate things?
Honestly, I haven't thought through it enough, like exactly why they would want to change it. Maybe that's part of it. That's a good point. I'm not sure exactly what their motives are, but I think we can safely say they're changing it to their benefit, right? They're not going to change it to make themselves look worse.
For sure. So also a good reminder for those out on Twitter to check your source, think about it for 5 seconds before you retweet what the first thing you see.
Yeah, you can tell by looking at that chart too. I think you pointed out, Brandon, it's like it doubled. It's like that right away I saw that. I'm like, that doesn't look right.
Exactly.
We've seen a chart similar to this though. You could understand why people might think that this is real.
Yeah, it doesn't look that different
from money supply charts from COVID printing, right?
That's what I was thinking. Yeah, COVID, it does look similar. You're right.
Yeah.
The line looks similar, but the y-axis betrays that.
Correct. Yeah. Correct. John, I'm going to throw this one over to you to tee up for us.
Yeah, so this one comes from Luke Groman. He's definitely preferred macro analyst in my opinion. And he basically is pointing out a trend that was underway under Yellen and looks like it's going to continue under Scott Bessent. So this is important because we obviously just had a shift in administration. That means a whole bunch of new people, in addition to the president, get into their roles. Scott Bessent, as Treasury Secretary, is taking over Janet Yellen's spot. And basically, Yellen, for several years, really the whole period post-COVID, the U.S. was issuing short-dated debt. And short-dated debt, think of it like a year, definitely inside of 5 years, sometimes just 1 year debt. They even have like 3-month notes. People have been wondering this. They've been asking this question for a while. Why doesn't the U.S. issue more 10-year debt, 30-year debt, even 100-year debt? And why didn't they do it when rates were lower? and as Groman said in his tweet, you can say, oh, they're just dumb. I don't think that's it. I don't think Janet Yellen is stupid. I think what's far more likely is that there's not really natural demand from what I would call natural investors, meaning non-central banks, people who can't just print the money out of thin air, to buy 10-year debt, 30-year debt, 100-year debt. So even though Bessent was critical of Yellen doing this, he's signaling that he is going to continue this same policy of issuing more than historically average front-end debt. And I think, again, it just points to the fact that there's not really a big pool of natural buyers of U.S. 10-year, 30-year, and beyond debt. So that's kind of a nuanced macro point, but it plays into this whole thesis of like nothing stops this train, fiscal dominance, because it just shows that the U.S. Treasury as a global reserve asset is falling in popularity. It doesn't mean that it's going to zero. It doesn't mean nobody holds it, but the people who have historically held it are incrementally less inclined to hold more of it.
And John, to take it one step further, the reason why there's not demand on the long-dated treasuries is because inflation is expected higher than that, right? So you're buying a long-dated treasury that will lose money. Is that the right way to think about that?
Yeah, I think it's part that. I think it's part that's a huge part of it. Another part is just the shape of the yield curve that right now, it's well, I would have to, it's flattened a bit, but for the past like year or so, you could get 5% on a 1-year treasury and you were getting like 3 or 4% on a 10-year treasury. So it's like, do I want to lock in 3 to 4% on a 10-year? The only reason you would do that is if you think the front end rates are going to come back down to zero. No one's really thought that too much. So they would rather just get the 5% for a year on the front end. So I think that's what you said is part of it. That point is part of it. And then I think another one is just people, like what happened to Russia in 2022. How much do you want to accumulate a reserve asset that if you get on the wrong side of the world's biggest superpower, like they can freeze your asset? Like, I'm not claiming that like America's greatest allies are really in fear of that right now, but there probably are some people thinking that, especially if they have a big bag of treasuries, they might be like, all right, that's okay, but I'm not going to add to it further.
Makes sense. Should we go into the Bitbond as a theoretical solution to this problem?
Let's go right into Bitbonds. So this is an idea that's been floated in the last couple of weeks. Started with a white paper written by Brian Estes. We've got a little ChatGPT summary here of what the white paper says. Basically, starts out saying we're in a debt crisis. And if a small percentage of issuance, these buys Bitcoin, of the bonds that are bought buys Bitcoin, given to bondholders at maturity, that we can basically create. It's similar to the MicroStrategy bonds. We can basically create an incredibly attractive bond offering at low rates that Bitcoin is then available basically at the end of the bond maturity as payoff. Very interesting, and we'll take a look here real quick at Preston.
One thing, let me throw up the chart. And when you're looking at this chart that's part of this paper, you can see how since 2008, this blue line is the amount of sovereign debt that's been issued, and it's just going gangbusters. It's going crazy. Many would say that you're in a debt spiral. There's many people with Doge trying to solve that. I think they've got an uphill challenge. I've made another video on that, but the fact of the matter is this is the debt issuance, the rate of it. The red line is showing you the rest of the world's desire or their demand for buying sovereign issuance, which is flat since 2008. I think this chart is super important for any policy maker to really wrap their head around and think about very deeply as to what do they have to do to start creating real interest for long duration debt, sovereign debt. Because this chart is scary, like really scary. So keep that in the back of your mind as you're thinking through this and what in the world the US and any other sovereign can do to reinitiate actual free and open market demand for long duration sovereign debt issuance. The last thing that I would say is when we look at MicroStrategy, this is an example not only of a company that's incorporated a Bitcoin treasury strategy, but which has outperformed nearly everything since they've taken that on, even outperformed NVIDIA. But this is the part that I think is really missed on a lot of people is the convertible debt, the fixed income debt that they've issued has been the best performing fixed income debt on the planet. It's performed incredibly well because it gives a person with a fixed income mandate access to Bitcoin's underlying performance through the convertibility back to the common stock. And so what I think these Bitbonds do is something very similar, but on a sovereign level, which is it gives people that have a mandate for owning fixed income, especially sovereign fixed income, access to something that's been the best performing asset over the past decade.
All right, there you go. Preston lays it out. Any reactions, guys?
I think great. That was kind of a perfect segue because the chart that Preston showed with the red line being flat, that's basically exactly what I was referring to. These other natural buyers of US treasuries, they're still there. It's not like they're going to zero. That would be too extreme, but they're not increasing. Groman always highlights this statement that the Chinese made in 2013. something to the effect of it's no longer in China's national interest to continue accumulating treasuries as a reserve asset. Like they told people that, and they're following through on it since 2013. What I would say about the Bitbonds, so I think everything Preston said and what Brian Estes and that team of people laid out, it's reasonable. One thing I would point out is that the way that it works is the bond buyer, 1% of what they use to buy the bond goes into Bitcoin. The bond holder gets the Bitcoin back. There's no like sharing of the Bitcoin appreciation. The bond holder just gets that Bitcoin back. The idea is that there's enough treasury bondholders out there that are itching for Bitcoin exposure, but they can't get it. Like everything they're saying kind of makes sense, but here's where I think it falls down and why this is almost impossible to happen, or at least impossible for the US to choose to do this, is because they're basically signaling to the world, hey guys, there's not enough demand for our debt, and we have to put in a Bitcoin kicker for people to want to be interested. Like it's just really unlikely for them to pull the curtain back and be like, we're doing this. So I think it's a cool idea. I just think it's too early for this to happen. I think Bitcoin would have to get way more entrenched in the financial system and to feel normal to people. If they did this like tomorrow, for example, or Monday, it would seem like a panic move. And I think they would not do it.
Yeah, that makes sense. I was going to ask, like, what could, I don't understand this, the bond kind of stuff too well, like even how this compares to like Bukele's volcano bonds and stuff like that. But that's my thinking too. It's like, it does not seem likely. It seems like a lot of stuff with Bitcoiners talk about, we're a little bit ahead of the game here. There's no chance of this happening anytime soon. I would highly doubt, even with a Trump presidency and someone who's super pro Bitcoin, doesn't seem likely.
I think on paper it makes sense, right? You get to issue debt at zero interest. You have a new incentive to sell long-term debt. It solves the problems we have. But yeah, is there an appetite? Does it signal something that ends up making the system worse? I don't know. But pulling in one more data point, globalism peaked in 2008, measured by global trade as a percentage of GDP. So we've been declining for almost 20 years now, which correlates exactly with that chart. Which I think is quite interesting. And so I think shifting towards isolationism has been occurring since then. And I think it's been accelerating since. And that lines up with all the reshoring efforts, a little late on that effort, I might say, but feels like we need to feel the pain before we take action in any of these situations.
And maybe we could just ask ourselves the question this way. What do you think is more likely when the US, which has happened in the past, they run into an issue where there's not enough natural demand for their treasuries? What do? The central bank steps in, the Fed buys them. Like there's already a playbook for this. So it's either going to be the central bank, you run this playbook again, QE, they'll dance around it. They'll say, no, this isn't true QE, even though they're buying treasuries, or they stuff the commercial banking sector with more treasuries. So ask yourself, are they more likely to run the playbook that they've run in the past and use the central banks and the commercial banks to buy treasuries? Or will they kind of pull back the curtain, rock the boat a ton, and add a Bitcoin kicker to a treasury bond, which has been like the same? The treasury bond has been the same structure for a long, long, long time. Again, I love the idea. I love the creativity. Put it out there, shift the Overton window a little bit, but odds of this happening anytime soon are very, very, very low.
Yeah. Yep. I completely agree. And, at the same time, you got to get this stuff out there. Like you said, John, like get the conversation started, get the idea out there. It's just now floated. Maybe it'll, be discussed increasingly over the next 8-12 years, something like that. But it could be something, interesting for the US at some point. If that did happen, I think you're going to see something like a Bitcoin reserve or Bitcoin held in a sovereign wealth fund by the United States long before you'll see treasury bonds be Bitcoinized. Okay. Anything else on that one?
I'll say, I think the vibes may indicate that the chance is higher than we think. I don't think we should look backwards for our lessons on this one. I think the Trump administration is saying we're going to try a lot of new things. We're willing to at least talk about them. Now, yeah, the difference between floating it and getting sentiment and actually executing, that's probably a wide gap. But I wouldn't be surprised that going down the road, this is something that they try. And
yeah, something out of the box is not out of the question in this administration for sure.
Yeah. You're thinking fourth turning vibes, right, Brandon? Like,
can't help myself.
All right. Let's take a look at Saylor. He was at CPAC this week and delivered a 20-minute real masterclass to a very large room full of influential people. In this clip, he focused on the idea of freedom and why is Bitcoin American? Because Bitcoin is freedom. Let's take a look.
Money that they can't take away. What freedom do you have if you have all of your money in a bank that can freeze it? What freedom do you have if you have your money embedded in a currency where someone can print 4x more of it without your approval and debase it to zero? What freedom do you have if you own real estate in a city where the mayor can put rent control on it or expropriate it, or the governor can tax it away from your family? What freedom do you have if all your wealth is in a business where the government can tell you can't operate, shut down your pipeline, tax your employees, tax your income, regulate your product? And the answer is you only have conditional freedom until the government changes and they just take away that freedom. And then when they take away your wealth, when they take away your economic power, they're going to starve you to death, and then you've got nothing. So Bitcoin represents putting your economic wealth in cyberspace. It's beyond the reach of the mayor, beyond the reach of the governor, beyond the reach of any nation state, beyond the reach of any other company that would do you harm. It is the first time in the history of the human race that you can bind economic energy tightly to an individual, to a family, to your company, and you don't have to ask permission to have economic wealth, to have money, and you don't have to live in fear that someone gets up on a morning and just takes it all away from you.
Great stuff. You love to see the. I mean, this is the kind of tack I like to take, or the sort of the benefits of Bitcoin that I really personally love. Like why I'm on the Bitcoin mission is freedom. The fiat money system, the fiat money cartel, the global cartel, has been. Let's talk about suppressing and oppressing the poor middle class around the world. That's what it's done. Fiat money throughout all of history. It empowers the rich, and it disempowers and therefore sort of controls the general population. And with Bitcoin, we can opt out of that. We can opt out of that control structure. We have the money. We can hold it ourselves. I've got my Bitcoin in cold storage. I have my keys. They can't do anything about it. The fiat control system can't do anything about that. I have my economic power. And Bitcoin as freedom just really resonates with me, really gets me pumped up, and is why I'm here.
Yeah, it's great to see Saylor bring it back to the freedom and just remind people what like you're saying, Brady, exactly why we're in, what Bitcoin, one of the best value propositions for Bitcoin is that it's, it's money that you can hold that can't be taken from you and can't be debased against your will. And so he's really, a lot of people say Saylor is has shifted away from being an advocate for self-custody, but clearly in that video he's being outwardly a proponent because he's talking about self-custody, because he's not talking about having an ETF, he's not talking about owning his stock, he's talking about owning Bitcoin in self-custody. Yep. And the power that holds. And I feel like with the institutionalization of it and the financialization of Bitcoin, that gets lost a lot. People forget that. Even just like the debanking and what happened with the Freedom Convoy in Canada here, locking people's bank accounts. It's like that's really why we're here with Bitcoin, and that's why it was created, right? So it's great to see him talk about that again.
Real quick, Alex Gladstein, who's one of my favorite Bitcoin authors and thinkers, because he really focuses on Bitcoin as freedom. And he posted on Twitter the front page of the Times of London that was referred to in the Genesis block of the Bitcoin blockchain. And, we all know the headline, Chancellor on the brink of second bailout of banks. But above that headline is a huge picture, and it's talking about war. I think it's the war in Afghanistan. And he's like, he said maybe Satoshi chose this in particular, not just because it's talking about the money printing that's happening, but also because Bitcoin is a way that we can defund the war machine, right? Like if people can hold the money and you can't print it as easily, you have a hard time funding wars, right? You have to tax them. The reason you can have forever wars is you don't have to tax to run the war in the United States, because you can just print the money for it, because we have the global reserve currency. And you can't fund everlasting wars like that without taxing the population at that point, if you have a money like Bitcoin. And taxes are quite unpopular. It puts it right out in the face of the general public. Like, okay, are we going to do this or not? Are we united behind this or not? Right? With money printing, you can kind of hide it, right? So that's really interesting thing. I had never noticed on the front of that newspaper.
Quick addition there, Brady. I don't remember the exact number, so chat fact check me here, but they tallied up the Middle East wars, Afghanistan, Iraq. I don't know what all went into it, but it tallied up to somewhere between $50,000 and $80,000 per family.
Yeah.
And if you said, "Hey, family, do you want to spend this amount of money over the next decade?" The answer is obviously going to be no. And so, yeah, the shadow inflation tax to fund the war machine totally makes sense. Yep. And if we go to Saylor, for example, why is he talking about sovereign money at the CPAC thing? Well, let's step back. Saylor is a world-class speaker, communicator. He knows his audience. He knows how to tailor the message to deliver what he wants to deliver. And I think he does genuinely believe that. And people get mad when he's on CNBC talking a little bit more about financialization and stuff like that. But again, knows his audience. But let's go big picture for a second. Pew Research did a study in 2020, and they compiled, I think they've been doing it for a long time, but the most recent study I saw was 2020, and they were tracking trust in our central government. Okay. In 1961, 80% of people said they trust the federal government to do the right thing. In 2020, that number was 20%.
Fourth turning.
Okay. Yeah. Also a thesis of fourth turning in numbers. I don't know what the numbers are now, but I think maybe we rock bottomed in COVID time, and maybe it's ticking up a little bit now. I don't know, but I think that's the context we're in. And so it's no surprise that Bitcoin's having a moment. It's no surprise that words like fiat, freedom money they can't take away from you is common now, right? That is a symptom of the conditions we're in. And even 5-10 years ago, obviously Bitcoin played a role, but 5-10 years ago, no one was talking about these things. Fiat wasn't a word.
Yep. Yeah.
Now the Fed and the Treasury and the talking heads, they all say the word fiat unironically. Yeah. And so, yeah, sign of the times.
And if you don't know what it means, it's by decree. It's Latin for by decree. So fiat money is issued by decree of a sovereign. So that's where it comes from.
Not just an ugly car.
This is true. So speaking of, we're on these topics here of the financialization of Bitcoin versus kind of the idea of sovereign Bitcoin. Pierre Rochard was on our friend Stefan Livera's podcast this week, and I think had a great take on this idea that I thought
I think that it's actually about their understanding of Bitcoin. Where if I tell them, look, you can basically trust financial institutions, right? If you tell them that, then they immediately jump to, well, then what's the point of Bitcoin? Why do we have Bitcoin if people are just gonna use third-party custody? There's no point to this whole experiment. We could have just stayed with the dollar. And that, I think, is where we really see the giant chasm between like my monetary maximalism understanding of Bitcoin and their cypherpunk understanding of Bitcoin, where I think that Bitcoin is both, and that they're missing the fact that Bitcoin's monetary policy and the option to not trust a financial institution is inherently valuable. And so the fact that you can opt out is what holds these financial institutions accountable so that they are limited in their misbehavior. That is that if everybody is stuck inside of their walled garden, then yeah, they can do whatever they want and they will abuse their power. If people are free to exit, well, the whole game theory changes for them. And so it is a paradox that is, I think, challenging for folks to wrap their minds around, because they have this black and white either or view of it, of either we're all running a node, all holding our own keys, and all benefiting from the central premise of Bitcoin, or people are completely missing the point and we might as well stick with fiat.
I love it. I think Pierre's one of the OGs. He's an OG in my mind.
Oh, absolutely.
I don't even know exactly when he got into Bitcoin. I know
2011 or something. He was at the University of Texas with Michael Goldstein when they created the Satoshi Nakamoto Institute, which is still one of the best sources of Bitcoin education out there. If you Google Satoshi Nakamoto Institute. So yeah, like 2011, he's definitely an OG. And especially in terms of like a thinker and, you know, a thought leader, which, and don't love that phrase, but you know, it works here in the space. So anyway, props to Pierre.
Do you know who loves the term thought leader, Brady? It's Goldman Sachs.
Yeah, I know. It's
become
like a corporate thing. I think it's a useful term, but it's just I don't know, overused, I guess.
They kind of killed it, unfortunately. Thanks, Goldman. But yeah, no, I think Pierre's phenomenal. He's been doing great Bitcoin education, articulation for so long now. And I think he nailed it. It's like there's a lot of people out there who, you know, I don't fault them for their idealism. They want Bitcoin to be, you know, freedom technology for every last human on the planet. You know, great goal. But they kind of take that and then say, oh, if people are not using it in the most self-sovereign way possible, then that's a failure of Bitcoin in some way. And I think Pierre nailed it. It's basically, that doesn't mean it's a failure of Bitcoin. It doesn't mean Bitcoin has no point. It doesn't mean we're just recreating fiat, what would happen with gold into fiat. Because as long as, and this is where the debate gets interesting, there is a debate. There's some critical threshold of people that do need to actually exercise this option to take self-custody that keeps the third-party custodians and financial institutions honest. And no person can pinpoint you and say it's this number of people, it's this value of assets that have to exercise that right in order to keep the system honest. But there is some sort of critical threshold. But what makes this all different is that with gold, which was the base money before Bitcoin, even wealthy people could not exercise that right. I mean, you can't realistically store all your wealth in gold. You're going to tap into it. You're going to have to move some of it from this place to this place. And nobody wanted to do that. Even if you were a billionaire in the year 1880, you didn't want to transact in gold. It was easier to transact in paper banknotes. That's not the case with Bitcoin. If you have, as long as you can afford the transaction fees and you've taken the time to figure out how to use the instruments that we use, the hardware and the software for self-custody, then it's completely trivial to send a Bitcoin transaction. And that to me is what makes all the difference. If there's some huge percentage of people that interact with Bitcoin through third-party custody, that's okay, as long as there is that critical base of people interacting with it in the self-sovereign way. Again, to throw the other side of bone, you do need some number of people doing it. We can debate about what that is, but I don't think we're anywhere close to the point of saying not enough people are doing this and therefore Bitcoin is a failure or is under threat.
Fully agree with everything said. And I'll just give another shout out to Satoshi on the very steep supply curve. Half the coins released in the first 4 years, 25% of the total supply released at the 8-year mark. Most of those coins held by ideologues way before any financialization. So we have a good head start with sovereign ideologues holding the coins. Hopefully that continues to maintain at least whatever the threshold is to make a trench.
Yeah, and let's not forget 99% of the supply will be on the market by 2034. Right? I feel like that is like people. It doesn't compete with people, but that's not appreciated enough. Like that is profound. That's wild to think about.
Yeah, and it's pretty close to that today.
Exactly. So, 95, 96%. Yeah, it's crazy. And you can't, like John was saying, like you can't, and I think we've touched on this before, like you can't have your cake and eat it too. Like people are going to financialize and build rails on top of Bitcoin and you know, custody it and all that kind of stuff. You can't stop that from happening. It's the whole point of it being a free and open system, right? That anyone can use. So you can't stop people from doing that. So you just got to do your best to tell your friends and your family about the importance of self-custody and why Bitcoin's important in the first place. Educate, and that's all we can do. It's like it's gonna monetize in its own way naturally as the market sees value for it, right? So
I think Hurley brings up a really interesting point here, which is even if someone disagreed with everything that I said and that this group here is saying, what would you do about it? I think the best argument is if we saw a situation where individuals were not self-custodying Bitcoin because of on-chain fees being too high or because the UI is just horrendous, then we should be pounding the table saying, hey guys, on-chain fees are too high. Only a small minority of people can use Bitcoin in a self-sovereign way, and we got to improve the UI. That's just not the case. Like the reason people are using the Bitcoin ETFs is because it's just the easier way for them to do it now. On-chain fees are the lowest they've ever been. And it's not like a UI problem. It's not like somebody who tried to use a hardware wallet and then said, this is too hard, I'm using the ETF. Like they're just in the ETF. They didn't even consider using on-chain Bitcoin. So that's like, we call it the top of funnel. There's nothing wrong with that. GBTC was the top of funnel for many, many years for people. And I know a lot of people who first interacted with Bitcoin through GBTC to later become like a full-on self-sovereign Bitcoiner. So this is like a progression. And just because a bunch of people own the ETF now doesn't mean they're going to own it forever. And even if they do continue owning the ETF for a long time, that's not a failure of
yeah,
Bitcoin.
and who knows, maybe what has to happen for that, for people to make that next step from having, a big portion of their wealth in an ETF or in MicroStrategy or whatever. And then is some kind of hack, right? Like maybe a good segue into the big hack that we saw today, right?
That
wakes people up to why you need self-custody.
Yeah, and we should mention Bybit here in a second, but I want to say that there will be a time in the future where the blockchain is inaccessible to a lot of people, because fees will be too high, basically. But there are other ways to hold Bitcoin in a self-sovereign way where you can transact off the chain and then settle back to the chain in big batch transactions, right? When you're ready to, like the Lightning Network and Arc and these kinds of solutions. So this is being built now in anticipation for a world where the transaction fees on the main chain are quite high, or a lot higher than they are today. So this is all being thought about, and there are ways to interact with Bitcoin in a self-sovereign way that isn't happening directly on the main chain for every single transaction. So just to mention that.
One more point, Brady, before we transition. What can we do about it as individuals? Well, the answer is don't sell your Bitcoin. Buy more Bitcoin. Don't sell it. Hold it longer. Make the price go way, way up before you give up any of your supply. Because if institutions are hoovering it up, right? If you sell as a sovereign Bitcoiner or a future potential sovereign Bitcoiner, you're just giving it to an institution who may never take it self-custody ever. And so there you go.
Let's do some quick hits and shout outs to wrap things up. Let's do Bybit first. So Bybit was hacked during a routine transfer. Altered transaction logic was the cause. There's some debate, like speculation, I should say, out there that this was maybe an inside job and not necessarily external hackers. Either way, $1.4 billion in ETH was removed and sent to a different wallet and is being sold right now as we speak and being tracked. I haven't been on Twitter for a couple hours to get the latest, but yeah, we're down from about 99K this morning to about 95K now. I think that a lot of people, when they hear that a hack happens on exchange, like confuse it with a hack of the blockchain itself. Like somebody hacked the Ethereum blockchain. And if that's possible, then it's probably possible you can hack the Bitcoin blockchain too. But that's not what's happening here. The Bitcoin blockchain has never been compromised. But exchanges that sell Bitcoin to you have been compromised quite a few times, starting with Mt. Gox, which is the most probably legendary example. There are many others. And this is why self-custody is important, right? So if you buy coins off exchanges, take them off the exchange and put them into cold storage so that you hold the keys. If there is a hack, you're not exposed. Yeah. Any other thoughts on the Bybit hack?
Stupid games meet stupid prizes.
There you go.
Yeah, I see some people in the chat. It was a little earlier, but they were freaking out about the price. It's like, come on, it's 95K.
Yeah.
Like the drops have been, I feel like we're almost getting accustomed to these like little mini dips now that people are like, oh my, it's like the corrections have been so mild, and anything in this, this obviously is not bad for Bitcoin. So you see a price dip like that for an exchange hack telling you that you should self-custody Bitcoin. It's a good buying opportunity. That's buy the dip.
I wish my DCA buy didn't go through this morning.
Yeah.
I'd rather have it now.
Exactly.
GME, GameStop, everyone's favorite meme stock, has, right, well, the CEO is interested in Bitcoin, has been talking about Bitcoin publicly for a while now. Was following his company's account only on his Twitter account, is now following 2 accounts, that being his company's and Bitcoin Magazine. GameStop has, Sam Callahan, our friend here, notes that GameStop is sitting on $4.6 billion in cash. If they put a significant portion into Bitcoin, they could become, if they put 50% of it into Bitcoin, they would instantly become the 3rd largest public Bitcoin treasury. This is very interesting. Something's going to happen here. I don't know what the scale of it's going to be, but
wasn't he pictured with Saylor too recently?
Yeah, I think so. Yeah,
it's like if Saylor personally orange pilled him and he doesn't buy some Bitcoin, I mean, he's got to be the stupidest person in the world. With $4.6 billion, and honestly, like a company that is just like a meme at this point. Like I remember when the whole GameStop thing happened, it was like trying to like tell people like Bitcoin is the actual. This is what you want. Bitcoin is what you want. Is it you want to say screw the system? It's like that's you want Bitcoin. You're not going to get some meme stock to stick it to the hedge funds or whatever, right? It's like, and no one got it. Like the Roaring Kitty guy never seem to have understood Bitcoin. So I feel like it's inevitable. If he wants to keep this train rolling with GameStop, he needs to buy Bitcoin.
No doubt.
The history is beautiful here too, right? During the COVID mania, GME mania, what happens? The little guys trying to stick it to the man, and they got pretty far along. And then centralized finance, Robinhood plus Wall Street buddies rugged all the little guys, and they got wrecked. And so Bitcoin doesn't rug you, and this is a perfect time to transition. The meme is there, the energy is there, the cash is there, the hodler base is only an inch away from getting it. Yep. And they all took a hard lesson last cycle. And that's often what it takes to understand Bitcoin deeply. Yep. Those people become entrenched hodlers for life after they get burned. And so I think there's a huge opportunity there.
I will just say, I hope it happens. But the one downside to it would be the TradFi haters would like this would further entrench some of them, because they're going to be like, look, GameStop is a meme stock. This is like the dumbest thing of all time. And now they're just buying Bitcoin, and it's a bunch of retail idiots that are pumping up the stock. I mean, it'll be to their detriment, right? Because GameStop buying Bitcoin is a legitimate corporate treasury strategy, but this would fry the brains of TradFi Bitcoin haters for sure.
Yeah, I don't think you're going to be able to stop having their brain fried.
Yeah, I mean, GameStop's been frying TradFi traders for a while now, so it seems appropriate.
The first are destined to be last. Like, yeah, it's not. Yeah.
All right. Next, the Malay coin. Malay's meme coin was a pump and dump scam. I'm shocked. I'm absolutely shocked. Now, this is different than the Trump coin. All right, the Trump coin, the straight up meme coin, wasn't like sold as anything other than a straight up meme coin. This coin, Libra, they called it, which is actually I think the name of Facebook's attempted stable coin, right? The Libra token was sold, to the market as it's going to support Argentinian business, small businesses, right? And so this is what really gets me going is when, and this is why I think there's a difference between shitcoins and meme coins. Shitcoins will do exactly that. They will sell themselves of something other than what they actually are. False promises, misguidance, next Bitcoin, all this stuff. Ripple's the perfect example. They have built, all of their market cap on, keeping 80% of the tokens that they produced, that they issued for themselves, putting 20% out on the market, and then just releasing a bunch of just empty, completely like vaporware announcements, partnerships, etc., for years and years and years. And for some reason, these people continue to believe. That's what is happening here too. I wouldn't even call this a meme coin. I'd call it a shit coin because of that reason. Yeah, so we'll see what happens. It's really a travesty. It's super embarrassing for Malay. He just doesn't know what he's doing, obviously, and just got completely. He's either maybe he knows what he's doing, or he's an idiot. One or the other. He knows what he's doing. He's a thief, or he got conned into doing this. And yeah, so it went up to a big market cap and then just completely tanked. And some guy, Dave Portnoy's friend, has $100 million, doesn't know what to do with. He's trying to get himself out of trouble by giving the money back. But anyway, it's a bit of a shit show.
And I think the playbook here, let's just open source it, is shitcoin grifters. They latch onto some celebrity, some influence, whisper in their ear, hey, you're the man, you should do a meme token. Look, everybody's doing it. You can get rich. And then the leader, celebrity, whoever, either motivated reasoning, didn't do their due diligence, whatever, it's their responsibility to do those things. They go along with it, and then all of a sudden they get pwned. And that's no good. I wouldn't differentiate too much, Brady, between a shitcoin and a meme coin, or a Trump and Malay, or the African country who is a leader who is talking about that as well. I think these are all in the same ilk, but yeah, slight nuances.
Yeah, a little nuance. It's not completely different for sure. Yeah.
I like what you said there, Brady, though, because that resonated with me, because it's like the meme coins are, it's like that whole narrative that the meme coins are unapologetically gambling, right?
Yeah.
And then you go the opposite end of that, and that's the ultimate shit coin. Like, is there a bigger scam in the world than XRP? I don't know. Yeah. It's like, trying to actually say that they're going to be a part of some financial system and whatever. So it kind of bridged those two together. It was like a meme coin being like, oh, but look, we're going to like help out poor people in Argentina or something. So it's like the worst of both worlds, really.
Yep, exactly.
Yeah. Do you think meme coins are dead now? For now?
Brian Armstrong says that they're the future.
Oh my God, that post, that post from Brian Armstrong. We didn't even get to that, but man, the guy's just, I don't understand. Well, we were talking about it earlier. That he doesn't understand Bitcoin, but I think he probably does. But he's just so priced in to this shitcoin casino, business model that he can't, basically like say that these are all scams. He can't do it.
My argument for why he doesn't get Bitcoin is because even if he was just fleecing people for, making all his money in the casino because he knows it's a good business model, he can make a lot of money on trading fees, wouldn't he put more of the balance sheet of Coinbase in Bitcoin, the real asset, if he understood it? And he hasn't. So, and
that's exactly right. He had all these years to be stacking a Bitcoin treasury, and his is minuscule.
Yeah,
compared to Saylor's.
Doesn't he have like I don't know if this is true, I'm just speaking off the head, but doesn't he have like a massive ETH treasury, like bigger than Bitcoin? I don't know for sure, but I wouldn't be surprised.
Yeah.
Anyway, so I'm gonna go with he doesn't get it.
Finally, some positive news. Our friends at Fold, which is a fantastic Bitcoin only company, just like Swan, Bitcoin only, for all the reasons that we've just ranted about for the past 15 minutes, has gone public. They're listed on the NASDAQ under the ticker FLD. So go check out Fold. They have 1,000 Bitcoin in their treasury. They've got good momentum. So shout out to Will Reeves and the team.
Yeah, huge deal. Bitcoin only company going public. That's awesome.
Love to see it.
Yeah, and they've been through the ringer. Been friends with Will for a while. They've survived multiple cycles, shifted the business here, there, made it happen. Yeah, big ups to them over there. And I think to the broader market, it signals a couple things. The biggest one being that Bitcoin only companies can do it. They can be profitable. They can be good private investments for those who want to deploy capital. Where the previous narrative would be something like, if you don't offer the shitcoin casino, you can't make enough money for the investments to make sense. So Great to see. I expect more. We want more. And big love for the Fold team.
Absolutely.
And I hope to see more Bitcoin only companies go public. Just get the TradFi types used to it. Have them think of it as an industry. Oh, these are the Bitcoin only public company plays that are out there. So I love to see it.
Excellent, guys. We're a little bit over time. I know we got to get back to the grind. Everybody, thank you so much for joining us. We really appreciate your time. We will be back again next week, Friday at 11 a.m. Pacific, 2 p.m. Eastern. And Steven should be back next week again. And we'll hope that you join us. Check out Swan in your app store. Search Swan Bitcoin. Grab the Swan app. You can onboard to buy your first Satoshis, your first bit of Bitcoin in just a couple of minutes, 2-3 minutes. You'll get set up. It's a really easy onboarding process. We make it really easy for you to create recurring buys. We've got a nice chart on the front for you guys to check the price out. And then you can also check out our other services. We have an IRA product, a Bitcoin IRA. We have a Swan Vault, which is a multi-signature self-custody, collaborative self-custody solution, which is fantastic. Again, great onboarding there. We have Swan Private, which is a white glove service for high net worth individuals, for businesses. So check that out. And we'll see you next week. Thanks so much.